Hey everyone, welcome back to Corporate Decoder. Today we're diving into a financial report that's a bit like a time capsule. It tells a story of investments made long ago, and we're here to see if those investments are still paying off, or if they're turning into buried treasure. Prepare for a deep dive into the numbers about II Income and Growth Fund XXI Limited Partnership. This isn't your typical high-growth tech firm. It's a limited partnership that invests in commercial properties. Think of it as a landlord, but on a bigger scale, buying buildings and leasing them out to businesses. We will dig into how well this landlord is managing its properties and what the future may hold. First, a little background. This partnership started way back in 1994, and it focuses on buying existing and newly constructed commercial properties, then renting them out under what they call net leases. Basically, the tenants, the people renting, are responsible for most of the costs like taxes and maintenance. As of the end of 2024, the partnership had interests in 5 properties that cost them around $14 million. Here's a notable event. In 2021, there was a vote to decide whether to continue the partnership or sell everything off. Neither option got enough votes, so they decided to continue operations for another 5 years. Now, let's talk about who's paying the bills. In 2024, 5 major tenants each contributed more than 10% of the partnership's rental income. Together, these major tenants accounted for all the rental income. That's a lot of reliance on just a few businesses. If even one of those major tenants runs into financial trouble, it could seriously affect the partnership's income. It's worth mentioning that the management company, which handles the day-to-day operations, cut back on employee headcount during 2024. This in turn led to a decrease in compensation and benefit plan expenses. It's a cost-saving measure that could affect how things are managed moving forward. In today's digital world, cybersecurity is a big deal for every business. This company also recognized that they have been working to improve their cybersecurity program and protocols. The incident response plan is ready if anything goes wrong. Fortunately, they state that there have been no major cybersecurity incidents affecting the company. Let's get to the properties. The goal here is to acquire commercial properties that can bring in regular income. Grow that income over time, keep the original investment safe, and hopefully see the properties increase in value. They don't have a strict rule about how much they can invest in one property, but they try to spread their investments across different tenants and locations, like not putting all your eggs in one basket. Let's talk numbers. These are Warren Buffett's favorite part of the report. Here is a quick overview of the financials. One of the properties is a Jared jewelry store in Auburn Hills, Michigan, with an annual lease payment of about $5,000 each year. Finally, the Memorial Hospital in Diamond Head, Mississippi, adds about $106,000 in annual lease. Payment of about $105,000 each year acts about 10. Finally, the Memorial Hospital in Diamond Head, Mississippi, adds about $106,000 in annual lease payments It is important to note that not all these locations are fully owned by the partnership. Jared Jewelry and Memorial Hospital are partially owned, so they use something called proportionate consolidation method to calculate financial statements accurately. Now, shifting gears to the units of ownership, as of December 2024, there were 945 holders of record. These units aren't traded on any market, so there's no easy way to buy or sell them. The partnership does offer a way for limited partners to sell their units back to the partnership, but there are limitations. They won't buy back more than 2% of the total units in a year, and they don't have to buy any back if it would hurt the partnership's finances. The estimated value of the partnership's units as of the end of 2024 was $767 per unit. This value is derived using standard industry practices and material, such as opinions of value from real estate brokerage firms, appraisal reports from real estate brokerage and appraisal firms, etc. All this to assess fair price. The calculation starts with the estimated value of the partnership's assets. Then they subtract the liabilities and the value attributable to the interest of the general partners. Finally, they divide that number by the number of units outstanding. Keep in mind that this is just an estimate and shouldn't be taken as the price you could actually sell your units for. Let's dive deep into the financial results. In 2024, rental income increased slightly from about $997,000 to almost $1 million. Same operating income also saw a boost, jumping from roughly to almost the $6,000 but don't forget about expenses, which included partnership administration costs and depreciation. Costs and depreciation of don't forget $600 to 20 said, but don't forget about expenses, which included partnership partnership administration costs and depreciation. Ultimately, net income landed at about $26,000 for $26,000 for $26,000. So don't forget about expenses, which included partnership administration costs and depreciation costs and depreciation costs and depreciation 8,000. Don't forget about expenses, which included partnership administration costs and depreciation. It's ultimately net income landed at about $60,000. Turning to cash flow, operating activities brought in about $752,000 in 2024, and financing activities used up about $692,000, mainly due to distributions paid to the partners. It's important to note that Boulay PLLP, a public accounting firm, has audited the financial statements of AEI Income and Growth Fund XXI Limited Partnership. It's their job to make sure the numbers are presented fairly. Checking the assets and liabilities, cash increased from roughly $180,000 to about $240,000. Real estate investments, net of depreciation, were valued at around $9.8 million. Liabilities remained fairly stable. It is always worth checking related party transactions. The partnership reimbursed AEI, the management company, for various costs including management services and direct expenses. All these have to be according to partnership agreements. A quick but important note, the partnership mentions being subject to environmental laws. They conduct assessments before acquiring properties and have lease agreements in place to prevent environmental damage. No liabilities for this reason were recorded at the end of 2024. For the year 2024, value of lease intangible assets amortized to expense was around $119,000. In simple terms, they are spreading the cost of the lease asset over its life. According to the schedule, in 2024, their 5 major tenants, Sterling Jewelers Inc., Best Buy Stores LP, Dollar Tree Stores Inc., Advance Auto Parts Inc., and Memorial Hospital, represented 100% of revenue. That's a lot. Now, talking about the tax side, there's always a difference between net income for financial reporting and taxable income. For example, in 2024, net income was around $260,000, but taxable income was almost $500,000. Management claims that their internal controls over financial reporting were effective as of the end of 2024. This means they believe their systems are working well to ensure accurate financial reporting. Finally, it is important to recognize that this report is signed by the Managing General Partners President, Marnie J. Nygaard, and CFO, Keith E. Peterson, certifying its accuracy. And so what's the verdict on AEI Income and Growth Fund XXI Limited Partnership? Overall, the partnership seems to be in a stable position. The properties are generating rental income and management is keeping costs under control. However, there are a few things to keep an eye on. First, the heavy reliance on a few major tenants could be risky. Second, the lack of liquidity for the partnership units means it's not easy for investors to cash out. Despite these challenges, the partnership's focus on stable income generating properties could be a good bet for those looking for long-term steady returns. However, you should always consult with a financial advisor before making any investment decisions. Thanks for tuning in to Corporate Decoder. If you found this analysis helpful, be sure to like, comment, and subscribe for more deep dives into the world of finance.